听是华尔街时刻，我是主持人于超。本期华尔街时刻节目，我们邀请到的嘉宾是华尔街 First Standard 的首席市场分析师 Peter Cardillo。
Non-farm report is due on this Friday, and the general expectations of the September the credit job is around 100K, and the unemployment rate probably remain flat around 4.4%. So what is your prediction? Do you continue?
Yes, that's right. I'm looking for unemployment to be around 4.4%. I think non-farm's probably going to be close to 179,000. I'm a little bit high on that number because I think a lot of economists have included the recent hurricane situation, which may have taken a bite. But I believe that the service sector in the Northeast probably is somewhat stronger than we anticipate. And so we're looking for about 179,000. But I also believe that there'll probably be a nice increase in hourly wages of about 0.8%.
Yeah. And for this non-farm number to reach what kind of level will make the Fed have build up more confidence to raise interest rates by December, you think?
I think if we, get a number above 150, then the Fed is not going to change course. And even if we get a weak number, there are some predictions perhaps as low as 100,000. I think the Fed stays on the course because it's a temporary factor. It also applies to weaker growth in the third quarter, but I don't expect growth to be shaved off by that much, maybe about 0.5 percentage point. And so if you look at the numbers that we're getting now, they point to an acceleration in growth in the fourth quarter. So I think the fourth quarter is going to come in close to 3%, obviously on fundamentals, but I think a lot has to do with tax reform. So there's a lot of hope. It's a market of hope, and it keeps on going up, and up. And it's sort of like unstoppable. There are a lot of problems out there. There are political problems, there are geopolitical problems, and in some cases, maybe even valuation problems. But the market seems to ignore it. And that's because, again, tax cuts, especially at corporate levels, is a powerful ingredient for corporate growth and for economic growth.
So for personally, the GOP just released last week is the blueprint for the tax reform, and it aims to simplify the tax code and to cutting off personal and corporate rates for Americans. So what have you seen from this reform so far?
Well, I'm not sure whether the reform is going to move into legislation in its entirety, but I do believe that we will have some essential tax cuts. Now, almost all the time that there is proposals, the proposals are always watered down somewhere along the line. So I suspect that that's going to happen this time too. But we probably will wind up with tax reform, and that's the key.
This morning, the Warren Buffett just saying that we are kind of holding off selling investments to see how the GOP tax reform shakes out. So do you think and do you believe that the odds of passing this tax reform plan kind of actually higher than people think right now?
I'm not too sure about that, but selling equities in this environment is sort of like missing the train, pulling out of the station, and nobody wants to do that. So, in fact, I'm not even doing that. So, I do think, however, that one needs to be fully hedged and protected. You may not, capture all of the gains, but at least you can have some sort of a protection insurance in your portfolio. And I think that's the best way to go, in spite of a market that just refuses to to give up.
Yeah, and also this week, except the non-farm payroll report, all the investors' eyes also keep on the speeches from Draghi and Yellen and Miss Yellen. So, and any hint on timing of the next rate hike from the Chair Janet Yellen will be significant. So, how much possibility from your analysis that we can get the rate hike in December?
Very little. I don't think there's going to be any change from Yellen, and I don't think there hasn't been, and I don't think there will be any changes from other Fed speakers. I think the die has been set, that they're going to raise rates in December, and the reason being is the economy is strong enough to have another rate hike, and besides, they are going to begin to trim their balance sheet this month. So they've got to make sure that everything is placed.
So when crude oil prices increase in 4 weeks and it's kind of show the profit taking, and do you see the profit taking will continue in the coming weeks?
No, I think we settle around these levels, around $50. Look, I remain quite positive on oil prices. I truly believe that the market is rebalancing. The evidence is there. We came down pretty hard yesterday, and that was mostly due to the fact that compliance in September dropped down to 86%. By and large, that's still a pretty good number. So the market is still somewhat skeptical out there. And I think the real problem that we're running into right now in the short term is not so much the fundamentals that are changing positively, but the technical aspect. We tried to get through this $53 range and we couldn't, so there was a lot of resistance there. And I kind of think that it was the technical aspect of the market that really contributed more to the decrease in compliance.
Do you think that maybe this upward trend is more focused on the Brent crude, not the WTI? Do you think WTI just still the oversupply for that stockpiles?
Well, Brent, obviously there is a wide gap between WTI. The spread obviously is almost $2.50 to $3. And there was a time there that we had begun to see some narrowing of that spread, but now it's back to where it was. I think that'll continue.
下面针对非农数据的预测和大宗商品市场的分析，我们来连线 CME 芝加哥商品交易所交易员。All eyes on non-farm payroll report this week. So, what is your prediction?
Tough to call that number. I think it's probably the 150 is probably, given this level of unemployment rate, the low level of unemployment that we have, that I think that for those looking for really gains of 200 to 250 to 300, I think that's not going to happen. So I would probably say, given the hurricane effects, you could see a real abnormally low number, and that again will be adjusted again. So I think it's the trend of this payroll number is around the 150 to 170, which I think is consistent with the unemployment rate. So I would watch out for the effects from the hurricane that the hurricane effects, but nevertheless, the trend to me seems very entrenched at the 150 to 170 level.
The factors gold and silver were trading lower in morning trade on Tuesday following subdued demand of precious metals amid firm active markets and the US dollar. So what is prediction for gold price?
Yeah, as long as the dollar stays stronger and interest rates are rising, we're going to see an unwind or at least some liquidation of the bullish move that we've seen in gold. I mean, gold trades at $13.50. Now it looks like it can trade down to the $12.40 level. I think I said earlier $12.60, but I think $12.40 is probably a really good location. I believe if one were short to cover, and also if one were looking to add to long positions or initiate a long position, I think $12.40 is good. But it is basically a function of the dollar, and continued dollar strength and continued rise in interest rates will continue to be an overhang on the price of gold.
好的，感谢您的收看，我们下期再会。